Hey guys, welcome back. My name is John, and today we're going to be talking about Palantir Technologies, or stock ticker PLTR. So if you don't know what Palantir Technologies is they're a software development company for big data analytics. They do business with the US government and the CIA, and they're kind of a mystery, sort of. You know, they work with the government, and a lot of that is confidential. There's a lot of good videos on Palantir Technologies out on YouTube. I'm not going to go too in depth into their business, but as always, if you like watching videos like these, make sure you hit that like button and even consider subscribing. Anyways, let's get to the video. Notepad on the right so you guys can see what I'm talking about as I talk about it. So I have, the balance sheet, income statement, cash flow, statistics. So the first thing we're going to look at is their balance sheet. They're in pretty much a lot of debt. So when you do buy Palantir right now, just know that you're basically buying into a lot of debt. And usually we're used to seeing positive numbers here where the stockholders' equity is. Down here on the third line, our assets are equal to our liabilities plus our stockholders' equity. So if we have 1.6 billion in assets, but we have 3.6 billion in liabilities, to get to our asset number, we're gonna have a negative $2 billion in stockholders' equity. The second thing is they also have a large long-term debt relative to their cash stack right now. So right now they owe $2.8 billion in long-term debt, and they're sitting on almost 1.1 billion in current cash and cash equivalents. And current liabilities are basically all the debts that they have to cover within the year. So looking at their income statement as a software company, they have a pretty good profit margin in terms of their gross profit. Software companies are known for having high margins because they are software. There's code on a hard drive, doesn't really take up a whole bunch of real estate. But what's pretty crazy about Palantir is that their operating expense relative to their total revenues is insanely high. It's actually more than their total revenues currently. The way they're running the company right now, they're burning money like crazy. If you look at their net income to common stockholders, it's negative $580 million. And if you divide that by the 441 million shares outstanding, they're losing about $1.31 per share on a yearly basis. Their financials don't look very good. Even though the industry is growing, their financials just don't look good, in my opinion. Their cash flows are negative, and if we look between 2018 and 2019, it's even more negative than before. Generally, as investors, we want to see a company improving their cash flows and financial statements and not going backwards. I really don't know what their strategy is, but essentially on paper, they don't look good. So if they're going to expand at 30% per year on an annual basis, we would want to see them grow at that rate, but do so profitably. Because at the end of the day, when you're buying stocks in a company, you are buying ownership in their company. And right now, if you're buying Palantir stock, in my opinion, I feel like you're basically just buying into all of their debt at current prices. Now, obviously, I could be wrong, and the price that you're paying right now really doesn't matter ultimately, as long as you're willing to hold this company for the long term. But really, you have to ask yourself, am I willing to pay $9.68 for a company that's losing about $1.30 for every share that you purchased in their company? In my opinion, I think there's better investment opportunities. I get Ark Invest is invested in them, but the thing is Ark Invest is not heavily invested in them. I think their latest holdings of Palantir is worth only about $250,000. And this is in their Ark W holdings, I believe the internet. Now, I think future growth potential for Palantir is strong because data is only going to get more and more complex and harder to manage as time goes on. But even though their industry is growing, they aren't really doing so profitably. So as an investment, I wouldn't be very comfortable investing in them. And to be honest, I don't think I ever will, but that's just my opinion. Draw your own conclusions from all the information that's available for you. And the more you do it, the more confidence you'll have with your investment decisions. And the more you understand a company, the easier it is to invest in them with confidence. For example, I've been covering Nano Dimension for a while, and I wasn't too sure about their business model, but the more I researched about them, the more I realized they actually have a really unique product. I promise you I'm not endorsed by Nano Dimension. I just really like what they're doing. Even if it's a good business model, we have to look at how they are as a company financially. Palantir has a good product, they have good clients, and their market's expanding at a pretty good rate, but they're not really profitable. And to conclude all this, that's why you have to do your research. You have to dig up as much as you can and work with the facts. A lot of this information is public. You can go on the SEC Edgar, or you can even go on Google. That's my take on Palantir. As of now, I don't see myself touching Palantir in the future. But anyways, make sure you like this video and hit that subscribe button if you learned something. And don't forget to hit the bell if you want to get notified when I make videos just like this one. But anyways, that's it for this video. Thank you guys for watching, and I'll see you in the next one.